Hello and welcome to today's market update brought to you by NeoTrader.com. My name is David Vigil and today is November the 30th, 2011. It's been a few days, actually about a week or so since I've updated my last video. There's a reason for that. The last 10 days have been, well, kind of uneventful. If you watched a few other videos, we expected some sideways movement, which we've seen, and part of that was brought about on this idea that since we had a very well-defined wave 2, which we think it is, this being on the A, B, and C move, that here we have this wave 3, and the rules of alternation would state that a wave 4 would be fairly complicated or sideways, and it has been. So we looked at this exhaustion gap, right? We filled it. Prices moved strongly to the downside, which we discussed in prior videos. Found resistance against this 120.02, and it's now retraced 25% of this initial move. So what we're looking for is prices to possibly trade flat again. Here's one word of caution, and I've been caught in this type of trade before. Whenever you have a clean wave 2, it's really easy and tempting to want to go long as soon as prices break this trend level right here, right? Or excuse me, this trend line here. So what happens typically is it breaks through, you go long, only to get whipsawed around for a few days, which is extremely frustrating. A few days, a few weeks. So this is one of the trades you really want to be patient with. If this was a very complicated wave 2, then we'd say, you know what, single slope wave 4 is expected, and we can expect some new highs, but I would anticipate this drawing out a little bit. If prices do break to the downside, it's finding support at the 50-day. Expect 115.63 to 112.50. One of the things we do here at NeoTrader is that we actually give you price targets. And if you watch the videos long enough, you'll find that usually we're within 6 cents of some of these price targets, and we're one of the very few folks out there who actually put it out there, right? So we give you very specific price targets, which we hope is of value to you. Now, one thing I do want to point out before we move to the diamonds is one thing that I keep a close eye on is, what is the relationship between prior moves and this move that we're experiencing? And this is an oscillator, the 250-day moving average. What it's essentially doing is finding the difference between this 200-day moving average, 50-day moving average, and it's comparing, right, the space between here and the space between here, right, to the space between here. And what we find is there is some massive divergence between these two, which means that this most recent move is very corrective in nature. So, like I mentioned before in a lot of other videos, we talked about tightening up stops. If you did, there's a good chance that you locked in a lot of profits. It doesn't mean you have to take your whole position off the table, but I'm very cautious. I've tightened up my own stops. And one area, obviously, is, and that's what kind of why we bring this out, right? These are great stop levels. If we see prices close below this 112, expect a much larger correction. Let's go to the diamonds, DIA. Now, I went ahead and drew an additional parallel line. So we had this line here, I drew this one, and then I copied that line and drew this one here, and there's a reason for that. If we see an explosive wave 3, which is this move here, what we'd expect is that the 5th wave to be truncated or to come in on this internal trend line here. So following the rules of alternation again, we felt that prices would move down to 109.38. Hit 109.40. Again, we were 2 cents off. We called it. I expect prices to move up towards this internal trend line here, possibly find some resistance, move back down to this lower trend line here, which would be logical support, and then attempt one more high to this 115.60. This is tentative, and I'm a little hesitant to draw trend lines like this because they always change. But technical analysis, like I explained before, is like driving in the fog. If we can develop some scenarios and we can talk about reward to risk ratios and which trades then fit our trading profile. So here, this is a trade, even if it breaks this trend line or this channel, that I would not take because my risk to reward ratio may not be exactly where I want it to be. So let's go and keep an eye on that. Now, let's go to the Qs real quick. And we talked about before some of these lines here. Again, resistance. We talked about this possible leg up before you short it. We did see this leg up here, right? But we want to see prices fall below this. If it does, we're looking at $50. If prices do hold, which again it does have the base, this leg here has to take out this low, right? But if it doesn't, it finds support, we're looking at 54.70. Let's move on to SLV for time's sake. Boy, silver has been on quite the tear. We talked about silver in previous videos. What we found is, there was what I felt was a possible runaway gap. Prices filled it, but did not close below this previous high. In fact, it rallied back. And so as soon as selling pressure comes in, people are starting to buy it. It hit some resistance here, which was expected. But it broke right through it. Right? So right now we're looking at initial price targets for silver being 29.68 to 30.20. There's some volatility issues which don't allow me to actually put a very specific price target on silver. And the thought is this: is that as the precious metals begin to gain momentum, silver will be the last high to be achieved. And the reason for that, as I explained before, silver is the most affordable of the precious metals. So what I'm looking for is for silver to make a new high, for gold not to confirm, and then we're looking at shorting all the metals at that point. But as of right now, we're still a little bullish on silver, and we're looking at 29.60 to 30.20 for our actual price target. Let's go to gold real quick. Gold kind of painted an interesting picture for us. So we've seen this move here, a higher high, and then almost a parallel line between these two, right? Which almost gave us an indication of a head and shoulders. What we wanted to see, if it was a head and shoulders, is the close below this neckline here. What happened though is that, prices moved up, it found support, which is a good base, and it's looking at making higher highs. So gold, we have an initial price target of 145.32. Let's go to the euro, which has been very interesting here lately. As we discussed before, we felt this was a corrective wave, which it turned out to be. And we talked about prices moving down to this 133.90. This level right here actually hit 133.96. We were 6 cents off. We'll take it. Prices moved up. The significant things here is that prices moved gap down, and then they moved to close below this 200-day moving average. Right? Now this is a little extended here. I'd expect for somewhat of a pullback, but it's going to try to test this level here, right? So it's going to try to come up, test this level here, right? If it fails, then we're looking at a move down to the 128.12 for the short term, 123.45. And if you look here, we see a widening in the MACD. So we're still very bearish on the euro, although a short-term correction from this massive move down is more probable than unlikely. Let's go to the dollar index. Here, a few things to point out. We talked about 2305 being the initial resistance level. Prices came in at 2307. We were 2 cents off. We'll take it. We had another price target of 2344. Prices came in at a high of 2352. We're going to take it as well. The next target is 2422. But like I said with the euro, this has been one explosive move. we expect prices possibly pull back. Maybe not here, but here. And the likely support level is going to be this trend line right here. So prices pull back. If they hold, then we're looking at a really good risk to reward ratio here. And the reason why I feel like it's going to pull back is this is not a really good base to establish a newer high. So see this low, hit this high, lower high, lower low. This is a flawed base right here. We want to see prices accelerate, pull back, find some support, and then they're going to make a higher high. Anyway, that's today's market update. We'll have more market updates as the market allows us to. If it moves sideways, then we're just going to wait to see what the market does. Until then, happy trading. If you have any questions, feel free to leave me a comment. If you like this video, give me a thumbs up. Thank you, and have a great rest of the